Good morning, good afternoon, and good evening, everyone. It's 8:01 a.m. Chicago time on Thursday, the 30th and last day of November 2017. Yet another month is behind us. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, yesterday, some serious problems with technical problems on my side. Apparently, if you change microphones while the broadcast starts, you end up having to reboot the broadcast for it to work on YouTube. So that was something new to me. This is not intended to be that difficult, but I think I'll just make it difficult for myself for some reason. Anyway, this is I appreciate you all coming here and listening in. I'd like to ask for suggestions in the comments. If you can make suggestions in the comments on what can be covered or your perspective of the market and what is useful, please do so. The comments are all moderated. I'll have someone take a look, and if they're if they contribute to the conversation, then they're approved and for everybody else to see. Anyway, the overall market stance this morning, seeing higher across the board. One of the things I want you to note is the U.S. Treasuries, U.S. Treasury futures have rolled to March 2018. We roll in the futures and the index futures next month. First, so we'll have rollover next Thursday. So the Treasuries roll 1 week before the indices. So the Treasuries roll to March 2018. We will roll. The official roll of the index futures is the 7th of December. Expiration is the 15th, quad witching Friday. So just bear that in mind. But overall, I'm seeing crude oil taking a nice little pop here, $57.64, up 34 cents or 0.61%, followed by the Russell, which is up 8 points on the Russell, and the Dow, 117 points already, pretty strong. A lot of this is reaction to the anticipated tax plan from the current U.S. government. The growth numbers for the U.S. are the strongest in 3 years. The U.S. is showing a growth rate of 3.3% annualized. It's the strongest since 2014. And overall, the tax bill is what's governing. Yesterday, we had the news out of North Korea. For those of you who are watching the markets, we saw the market break a little bit. Actually, no. I mean, the day before, we saw the market break a little bit, and yesterday's market had pushed down into that SOC, the North Korean missile launch SOC, and used that as a base. So news is feeding a lot of this, and again, the tax plan is the key thing that is pushing us forward. So, with that being said, let's look at I don't know, I'm dating myself here a little bit, but if you're old enough to remember those really, really old Charlie Chaplin videos where they show you the characters moving very quickly but no sound, that was basically the theme of yesterday's Trader Bite. A lot of images with no sound, so it wasn't very useful. It's still up there. I wrote that I noted it as disrupted, but this was the primary scenario for yesterday. This was scenario number one, and scenario number one, the expectation was for us to push up and through into the 2633 to 2635, and then for the market to fall back through and return to balance by the end of the session. And unfortunately, there was not much more I can share with you with regards to yesterday's plan. It was just an art piece, a silent film. I'm very proud of it. Anyway, take it. It's good to laugh about the problems we have. But this is basically what happened yesterday. We pushed right in between to 26.34 and a quarter for new all-time highs, and then we sellers came in. I noted yesterday on Twitter that even the leader yesterday were the lead yesterday was taken by transport. So all those Dow theory enthusiasts were probably very excited, but the laggard yesterday and the strong force down were techs. Techs were very, very heavy yesterday from the open, just dropping without any remorse. Everything else was up. Transports were strong. Healthcare was strong. Financials were strong. Consumer discretionaries were sideways. Those consumer discretionaries, financials, techs, healthcare, and industrials are the five largest components of the S&P and make up about 76% of the index or something like that. And so the techs fell a lot more than the others were going sideways. And so overall, the market relented and it ended up selling off. And you'll notice that the SOC for the North Korean news right here on this rally day occurred right around 2620, and yesterday's low is 2619.75. Those of you who've been around a while have been exposed to the concept of the SOC, the scene of the crime. The market tends to return to the point where the auction was disrupted, and so we get to see that in action yesterday. There was a fair amount when we look at the how the market traded that. You'll see that this is the sort of thing that I mentioned a couple of days ago, where we see bids. This is the white part is the white part is size on the book in the book that remains in place at that particular moment. This is why I love this platform. As the market goes down, you can see the dark gray turn to light gray, turn to white, darker gray turn white, and then darker gray turn to white, darker gray turn to white, and so on and so forth. As the market is moving down, you can see it. You can see those bids come in. These could be algos. It could be they could be positions on trade desks. Whatever it is, it doesn't matter. But we see the market just scooping up that the offer, right? Just bidding up the market, or holding the bid, or increasing the bid as the market falls to accumulate against a key area, which was the SOC right here at 2620. Right, this is I'm giving you an example of a live setup, so to speak. I can't do it live, but I'm showing you what that looks like in the moment, at this moment in time. This is what the book looked like. In fact, we can shift this over a little bit and show you what the market depth looked like at that point. So let me expand that. You can see what the market depth, see that? We can see what the market depth, this is the market depth, this is what the market looked like in that particular instance. And we could see how the market was responding, how the bids were responding. As prices fell, the bids just continue to increase and get heavier and heavier. We can't see it very clearly here, but we see it very well on the map. And then it starts to bid up. So you see those bids down here as the market moves down. These bids are 14.95, 8.90, and 15.17. And as the market moves down into them, they move to 1700. You see that 1700, 1793. They get heavier as the market moves down, and that gives us an order flow based or depth flow based setup. And then here's the quick pop. Here's the quick pop back to the zipper, right? So if I was looking short, then this would be the pop into the zipper that I would short right here, right? The point of control, the pop. Some of you are familiar with this as well, this particular setup. And then I would be looking short, but obviously, based on the fact that the market had a peak there, from the North Korean news before the rally resumed on Tuesday, this did not lend itself to further selling. Also, this is a buy the dip type of market, and I'm always cautious selling into value, and so there it is. It starts to pop up. We have some selling that goes on here, and then the market pushes through, pulls back, consolidates, and then continues higher. And so that's a kind of a live look at how that works. Anyway, overall, notice that yesterday's point of control and the day before, right? So this is yesterday's and the day before in line. Markets in balance. It's balancing out for the session. So look for potentially one more day of balance or look for imbalance to come in next. And we're seeing imbalance to the upside in continuation with the move, right? The overall trend of the market. Remember, you're getting short and you're shorting against some major money that keeps flowing into the market endlessly as the market expects better earnings with reduced taxes, better performance by the underlying equities. Okay, so that's the overall picture. That is the context. If we get below this low here, I'm not expecting too much of a flush. I expect it to consolidate here within Tuesday's range. If we push lower, we're not. I need to look at a longer term chart and produce some potential target energy based or measured move based targets. And so I'm looking for that going forward. As far as the overnight session and how that played out, completely quiet over the Asian session, and then when the Europeans kick in right here, you see us trending up. As I said, the DAX was fairly strong today, so the Euro stocks are okay. They're only up 10 points, but overall the market has shifted prices up, and we've got an LVN in the overnight session right here at 60.30, 26.30.50, and holding steady. So I'm going to be using that to measure movement on the open. If we hold this 2630 50 area, then I'm going to look to the upside. If we fall through and then attempt to get up above it, consolidate and fall again, then I'm going to switch to short. And in that situation, I would target. Unfortunately, it's a tight target, 26.25, and then expect it to consolidate in range here for the next consolidation. Okay, so that's how the overnight set up. Going forward, what are we expecting for today? Again, I haven't produced the next set of measured moves, but overall, we're pushing up against the high. I'm expecting it to continue higher in the next 15 minutes. I expect this high to blow out in the next 15 minutes. I expect it to open in a small gap. I expect the market to make a very, very modest attempt lower, impulse up, and then I'm expecting it to consolidate. I don't, based on what happens with this bill going through Congress on its way to the president, this tax bill, which has within it basically a revocation of our health care plan, which has been fought over for 12 years, and so on. Based on how that goes, the market may see a very strong pop to 2660 from 2634, and I'm targeting 2660 simply because I'm expecting about 22 to 25 points of range if that happens. Um, and so that's what I'm expecting on that. But otherwise, I'm expecting it to balance and then take a small drop on the close. So I'm looking for a profile that looks like a small distribution down below, a larger distribution up higher, but overall not so much range. Maybe eight to 9 points for the day. That's the primary scenario for today. So a dip, buying the dip, looking for the impulse higher, looking for it to balance real quick. We may get a little pop into the close, but overall I expect us to end up with a weak high a weak high into the close, and then some small selling and some small delta divergence there selling into the close. That's the primary idea. Now, if we don't get any news at all, I expect this to float up, to grind up. I saw contested this move up yesterday was very contested on S5 bookmap, and so I expected the market to roll over. In fact, I tweeted about it in real time. I'm expecting this to then fail, make a lower high, and then start to move down. And in that case, the target would just be around 26.28 from yesterday on this value high and yesterday's open and the prior day's high. So this area here at 26.28 is expected to provide support initially, and then the market bounces back up to the open. That is the next biggest scenario. Is that a lot to digest? Maybe. You're all smart. So that's what we're looking for. And then our next weapon is to look at how the market treats. Here's what the market has been trading like so far. We'll see how the market treats any movement up once it opens. We're looking for offers to come in and get wider and wider as the market pushes higher, and we'll use that as resistance, and then we'll see how it rolls over, and it needs to have an impulse down before I start selling into it. Okay. Again, I'm going to remind you, what must you do today to win the day? What must happen today for you to win the day, to actually push forward with your progress, not to make money or whatever, that's the end goal, but what step are you taking today to push forward? Okay. As far as the Russell, let me just comment on that for a second. As far as the Russell, it's definitely picked up quite a bit. It traded yesterday much stronger. It is completely contradicting the expectation that I had for it. But again, this is all being driven by news. So what we had in the Russell is trend, balance, breakout, and then we have a bit of a flag here. It is likely to balance going up and continue higher from here. There's a lot of energy on the sell side that came in, and that's likely to continue to squeeze and push higher. That's what I'm expecting in the Russell. I'm not expecting it to roll over easily at the moment. It is showing relatively stronger response to the upside than the S&P right now. And a lot of that has to do with the fact that we broke this channel and started to push up. Russell was the laggard, and it's now showing its strength. Okay, so on the Russell to the sell side, it's probably the limitation on selling. If you look closely in the 1526 handle right here, there's a fair amount of support. To me, any drop down into 1526, I'm going to look to buy, and I'm looking for it to push back into the 1535, 38 area. That's really the strongest play in the Russell. Otherwise, the Russell has to be played from a value perspective. My personal anticipation is any push into 1546 or 45, I'm going to buy on the first push. Okay, so again, what do you need to do today to win the day? Good luck.